For my NMU students, I'm just going to run through, this is test 2. I'm going to go through test 2 with you on asset disposal. It's good revision for asset disposal, and it's also relatively fresh in your mind. So on the 1st of January 2024, Company A had the following vehicles on hand. There was a Renault Sandero, which was purchased on the 1st of July 2022 for 150,000 Rand, and there was a bakkie that was purchased on the 1st of October for 250,000. So those are opening balances on the current year, 1st of January 2024. We're looking at 2024, that's our financial year. So Company A has a policy of depreciating its vehicles over 5 years using the straight line method at a rate of 20% per annum. So their details. Then on the 1st of April 2024, Company A purchased another delivery vehicle. So this is actually in the current year, 1st of April 2024. The company purchased another vehicle for 100,000 Rand cash. This vehicle, the Corsa bakkie, had a tow bar fitted, which cost another 5,000 cash, and it became useful on the 1st of May 2024. Remember, you only start depreciating an asset from when it starts being used. So this Corsa bakkie, after the tow bar fitting, was only going to be used from the 1st of May. Also, the tow bar was paid for on the 1st of May. Quite a bit of information here, but like I always say, as you practice more, the same type of transactions and information comes up. On the 30th of June 2024, Company A sold the Renault Sandero for 100,000 Rand cash. So there's the policy. Then there's a purchase of a new vehicle, and there's a sale of the Renault Sandero. And when is year end? Year end is the 31st of December 2024. So what's required of you? It says prepare the following general ledger accounts. When you do a question like this and you're given ledger accounts, start with the opening balances for vehicles and accumulated depreciation. So you're doing the vehicles and the accumulated depreciation of vehicles, the depreciation account, and asset disposal. It says start with the opening balances for vehicles. I'll tell you straight away what goes into the vehicles account: the historical cost price, the purchase price of the vehicles. And if you have a look, they told us right in the beginning the Renault Sandero cost 150,000 and the Ford Bantam bakkie cost 250,000. So the first thing is we look at the opening balance for vehicles, and the opening balance for vehicles, the 1st of January, is the historical cost price, the items that were purchased, the vehicles that were purchased for 150,000 plus 250,000. And you go and put that into the vehicles account, 400,000. There it is, 400,000. 250,000 plus 150,000. That was very easy. The second thing we need to calculate is the opening balance of accumulated depreciation. The opening balance on the 1st of January for accumulated depreciation on vehicles. So now the Renault Sandero, we've had actually it's the 3rd year that we have it, but we only want the balance of the Renault Sandero from, well, up until the accumulated depreciation anyway until year end 2023, because the opening balance we want is on the 1st of January. It's the start of the current year that we're reporting on. So the Renault Sandero, you can look at the purchase date. We bought in 2022 and we had it for 6 months. So 150,000 times by 20% times by 6 over 12 is 15,000. That was in year 1 that we had the Renault Sandero. Then at the end of year 2, this is on the straight line method. So all we do is we say the historical cost price of 150,000 times by 20% is equal to 30,000. Now, this year is for year 1 and year 2, which is all we need to get the accumulated depreciation balance, because we only want the accumulated depreciation balance at the start of the current year. Then we also need to add the Ford Bantam Bakkie, which was bought last year, 2023, and it was bought, let's just check quickly, it was bought the 1st of October 2023 for 250,000. So we've only had that vehicle, the Ford Bantam Bakkie, for 3 months. So 250,000 times by 20% times by 3 over 12 is 12,500. So the opening balance at the start of the year that we're looking at, the 1st of January, for accumulated depreciation is 57,500, consisting of year 1 of the Renault Sandero that we've added, plus year 2 of the Renault Sandero, plus the Ford Bantam Bakkie in its first year, which was last year, 12,500, and that gives us 57,500. Now, accumulated depreciation is seen as a decrease in the value of the vehicle's asset, and there's the opening balance, 2024, January the 1st, and I just showed you the workings, how you got that 57,500. So now we've got the opening balances. Let's move on to further information. On the 1st of April, Company A purchased another delivery vehicle for 100,000. On the 1st of April, a vehicle was purchased. So we go and put that information into the vehicles account. It was purchased on April the 1st, cash, so we put bank under details, for 100,000 Rand. Then I'm just going to carry on right here, and you will see that a tow bar was added, and it was paid for in May, 1st of May. Now, a lot of people in the test added these two together, but the transactions happened separately. On the 1st of April, the vehicle was bought. On the 1st of May, the tow bar was paid for. Record that separately, please. The transactions happened at a different time. So now what we've done is we've gone and recorded on the 1st of April, the Bakkie was bought for cash, and then it had a tow bar fitted, and then they give us some information. It's available for use from the 1st of May. Now we get into the asset disposal. On the 30th of June 2024, Company A sold the Renault Sandero for 100,000 Rand cash. On the 30th of June 2024, halfway through the year, Company A sold the Renault Sandero for 100,000 Rand cash. So what you need to do when you make a sale, asset disposal, remember what you need to do is you need to depreciate up until the date of sale. So the Renault Sandero, we need to depreciate up until the date of sale. It was sold in June. It's the straight line method. 150,000 times by 20% was sold halfway through the year, times by 6/12 is equal to 15,000. This is the third year we've had the Renault Sandero. First year was 15,000. The second year was 30,000. Now we're selling it in the third year, 15,000. So we need to depreciate up until date of sale. And the entry when we depreciate up until date of sale will be, this was the selling date, June the 30th. Under accumulated depreciation, there's the depreciation for the 6 months, 15,000. But if we credit accumulated depreciation, the debit entry is depreciation. And there's the depreciation, 15,000. So what we've done now is we've depreciated up until the date of the sale. There it is. We credited accumulated depreciation and we debited depreciation. So that was step 1, depreciate up until date of sale. Now what we need to do when we do asset disposal is we need to transfer the cost price of the vehicle that we are selling to the asset disposal account. And what that means is we credit vehicles, because that there is the historical cost price of the Renault Sandero. We're taking it off our books. Credit vehicles, decrease in assets. And we debit asset disposal on the date of the sale, which was June the 30th. So we've transferred the cost price of the vehicle we are selling to asset disposal from the vehicle's account. Now what we need to do is we need to transfer the accumulated depreciation up until the date of sale of the Renault Sandero. So we go back to our workings and we see the Renault Sandero. In year 1, 15,000. Year 2, 30,000. And year 3, 15,000. You add those 3 years of depreciation up and it comes to 60,000. So what we do is we take the 60,000 from the accumulated depreciation vehicles, that relates to the vehicle we're getting rid of, and we take it to asset disposal. So if we debit accumulated depreciation, we must credit asset disposal, 60,000. Now what we got in this asset disposal account at the moment is actually the book value of the Renault Sandero, because cost price minus accumulated depreciation gives you book value. Now they say they sold this Renault Sandero for 100,000 Rand. There it is, 100,000 Rand. On the 30th of June 2024, sold for 100,000 Rand. We need to record that. So in the asset disposal account, it was sold for cash. We're going to record the 100,000 Rand cash sale. We would have debited bank, but they didn't ask for the bank account, and we credit asset disposal. Now let me show you what we've got in this account. We've got 150,000 minus the 60,000 gives us a book value of 90,000. So in our books, this vehicle is worth 90,000, but we sold it for more than what we had it recorded as, and we sold it for 10,000 rand more. So the balancing figure to make the two sides equal will be a profit on the sale of this Reynolds Sandero of 10,000. Then we close off this account, and both of these accounts, the asset disposal has been closed off actually to an account called profit on sale, and a profit on a sale is income, increase in income, 10,000. They didn't ask for this account, but I'm just explaining to you what account would get credited. Okay. So the 10,000 would have been closed off to profit on sale, 10,000. So now we're nearly complete. What we still need to do, the question says, make an adjustment to depreciate for the remaining vehicles at year end. Show this adjustment in the appropriate ledger accounts. So the cars that we still have in our asset register was the Ford. We've got rid of the Reynolds Sandero, and we have it for a full year. We're depreciating now for a full year. 250,000 times by 20% is 50,000. And then the Corsa Bucky that we've just bought in the current year, we've only had for 8 months. And 105,000 times by 20%. Remember, you include the price of the tow bar that was capitalized to the cost price of the Corsa. It was 100,000 plus the tow bar, 5,000. That is equal to 14,000. And that 50,000 plus 14,000 equals 64,000. And then the entry when you depreciate at year end for the remaining vehicles, we've already done the Reynolds Sandero up until date of sale. So we credit accumulated depreciation with 64,000, which consists of 14,000 for the new vehicle and 15,000 for the vehicle we've had for a couple of years. So we credit accumulated depreciation and we debit depreciation with 64,000. And that is this question on asset disposal. So just quickly, when we get a question like this and you're asked to do the general ledger accounts, you can do the opening balances. Let me see if I can change to a pen. So we do the opening balances, easy to get. This one was difficult to calculate, but we want the accumulated depreciation up until the start of the year. Some people did it right until year end with that number, but the opening balance is the start of the year. Then there's the depreciation for the current year. This was transferred to asset disposal. It's the accumulated depreciation of the asset that we're getting rid of right until the date of the sale. And then you got in here the asset disposal, the cost price, the accumulated depreciation, and the sale. This could have been on credit, and then you would have had accounts receivable there. And in our books, it's 150,000 minus 60,000 is equal to 90,000. Remember, this is your quick calculation. In our books it's worth 90,000. We sell it for 100, which means it was in our books 90, sell it for 100, which means we made a 10,000 rand profit. And there's the 10,000 rand. On the debit side, it's the balancing figure, makes these two sides total up to the same amount. And if you did get asked to do the profit and sale account, there it is. But normally they don't ask to do that account. It's normally these other accounts. Right, I hope that all makes sense. Best of luck in your next asset disposal question. Cheers for now.